I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like the service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Logan Burgess. Today is Tuesday the 24th, and we had the market trading down here a bit today. Corn down 1.5 cents here for the July contract, with new crop trading down 1 3/4. Soybeans off 11 1/4 cents for July, with that new crop contract down 9 1/4 cents. Wheat in Chicago trading down 8 3/4. Logan, across the news wires here today, we did get analyst estimates for the acreage numbers that will be reported on the 30th. It looks as though they're expecting 91.725 million acres, beans at 82.154 million acres, and wheat they're expecting 55.818 million acres. That seems to be that average guess for a forecast for the analysts. But I guess what I'm wondering here is, what should producers be looking at? What do you think is most vulnerable going into this report?
You know, I think soybeans is the most vulnerable here as we enter this report. Soybeans has been respectively strong here on the November contract. Historically, right now, we see pretty darn good prices, and I think that when you look at a report like this, where the USDA, or not the USDA, but the trade is expecting the USDA to come out with an 82+ million acre figure, there's some cause for concern there. Assuming good yield, which right now we don't have any indications to assume otherwise, 82 million acres is going to leave U.S. ending stocks well above 300 million bushels. So when you look at that, I think that that in itself is cause for concern when you're looking at prices. But even more important possibly is what we're looking at here on the world front. Obviously, the soybean trade is truly a global trade, and when you take a look at this slide here, you can see that U.S. production, which is expected to surge in 2014-15, is coming at a time when world ending stocks is also exceptionally high compared to what we've seen it over the last several growing seasons. So I think you combine those two factors here, it sets up a situation where taking 12.24 soybeans on the board might not be a bad situation. If this market, for some reason, can continue to move higher, and 12.24 is the lowest sale that you make all year, I think that's going to be a good year here of growing soybeans. So take a look at it with that perspective. And to answer your question that you first posed me, Cody, I guess that's why soybeans is the market that I think is the most susceptible here coming into the report.
Absolutely. And when you think about protecting it, there's a wide variety of tools that you can use. One would be straight futures, but of course there are risks associated with that particular liquidity if that moves against you. The other option here is to use options. Those are a very nice piece of insurance that you can have on price, or you could use short-dated options, which really kind of isolates the event. It really allows you to play this particular event. So there are a wide variety of tools here, and a combination of those tools, and to learn more about what may be right for you in your particular marketing situation, you should give us a call at 877-472-4607. We'd be happy to talk some strategies here to prepare for this report, because I think, you know, when we're going into this situation, we have a situation in soybeans with incredibly tight stocks, and then you have a situation where you have a potentially very, very large crop coming down the pipe. There's going to be an inflection point where we're going to see, I would suspect, that there will be an inflection point where we see soybeans, where we see this market break, and where we see that what has been propping up this soybean market, which is tight stocks, concerns start to be alleviated as producers have already booked stocks for the later parts of this summer. That's what I'm concerned about. I think that the probability and the distance that this soybean market has to go, since it has been so relatively strong, I think, you know, it really could break, and that is a significant risk posed for producers.
Absolutely. If you have questions about that, or just like to talk these markets in general, feel free to give us a call here at the office. Number is 877-472-4607. Coming down the pipe here, we do have EIA ethanol numbers out on Wednesday. We have export sales out on Thursday. And then, as Cody said, the big event here of the week is the June 30th, or excuse me, the big event of next week is the June 30th planted acreage and quarterly grain stock report. I'm sure here the rest of GrainTV, we're going to be discussing planted acreage and those quarterly grain stocks as we move through the week. So be sure to visit us here. Thanks a lot for joining us, though, here on a Wednesday. Have a great night. We'll see you tomorrow.